Presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Welcome, folks. This is Tom O'Brien. Appreciate you growling and prowling with us out here. Let's go take a look at these futures out here. Right now, you get the S&P futures off $7. We have the NASDAQ off $5. Gold's up $12, $13 right now. And when you have a gold, not that this is a big event, because the reality is that electronic trading has been pricing gold out, but this is the last day of gold fixing in London. What does it mean? That started in 1919, I think, somewhere around there. Bottom line is that it was four banks. They basically would set the London price. That's over as of today. It's going to be electronically done as it really has been done, because the fix had to do with what banks would sell it to each other. So the bottom line is that where it was trading electronically, that's where it was basically fixed also. Silver's up 37 cents right now. We got oil down $1.53. Oil had that high volume low yesterday. It's going to go get tested. Pretty wild. 45.12 right now. Bonds, the ever-ready bond market, it's not over, folks. Bottom line, the 10-year right now is flat. The 30-year is up 9 ticks. Both of those went wide price spread, accelerated volume yesterday. Bottom line, that top is wide open. King dollar's up 444 ticks at 99.22. King dollar, though, is done. King dollar, you talk about a back down yesterday. We'll pull King dollar up, but King dollar came down like 4,500 ticks. Monster volume, took everything back for about the last 3 months. Euro's down $1.87 at 106, and the yen is up 75 at 120.86. What you can expect out here today. So picture, we had the Fed come out. Fed said they take out the patience language. They say simultaneously, hey, it doesn't mean we have to go up in June. What does the market do? Bottom line, market takes off topside, dollar gets crushed, bonds take off topside, commodities, oil takes off topside, gold and silver take off topside. What the difference is that gold and silver had already tested the lows, did it with lighter volume, took off with conviction. Bottom line, a lot of these commodities want to go into higher price. The S&Ps, let's go take a look at the S&Ps right now. We'll use the future first. If you take a look at this future, we'll put this on a daily. What you're going to see, I suspect today, because of the amount of energy that it took yesterday to go from lows to highs, bottom line, you're going to be flattened out today. The volatility is not going to be that big today. Volatility will come back in the market later in the day tomorrow. Option expiration. Right now, the high in this future contract is 2109.75. You're at 2085. I suspect that baby is going to get hit. When you get that close to it, bottom line wants to get hit. The S&P, the SPY, we're gonna get this is what the SPY did. The SPY moved with volume, okay, and good volume too. And when you push into a high and you push in with volume, you're gonna go whack that high. Yesterday we did 228 million shares. You hit 211.27. You're at 210.46 right now. That's saying that the 212.24 wants to get hit. NDX 100, use the Qs, the 3 Qs on that, same type of setup in the 3 Qs. You had volume come in the deal. Those highs are going to basically get tested. And more than likely, it's going to be a dynamite option expiration, because I suspect that it's going to be tomorrow that they get tested. We'll see if they get tested today, but I suspect the market's going to flatten out a bit. Qs are trading at 107.92. That's where they closed yesterday. The high out there is 109.42. Well, we did volume out here yesterday of 40 million. It was 40 million shares. The high is generated out there with 22, but the way that is set up, that high wants to get tested. The IWM is doing a small ABC structure on the way up. That took out a B point, took it out with volume, and so one of the correlations there, what you could do is, as you're putting the harmony together with these different indices, let's see, the most It's going to get interesting on this IWM too as to what is the A point here. So if it's 114, yeah, realistically it's 114. 114 is the low that was generated on the 2nd of February, 114.38. The B is 123.78. So what do you get? $9. The C is 119.83. So you're talking about a 129 number. Yesterday on the IWM we did 40 million shares. That B point was 26 million. Gold contract. What do we do with gold out here? Gold yesterday ran fast, ran furious, did all of the above. We got to a price point of I think it's 1177. We hit it again this morning. Yeah, we hit 1170. Yesterday was 1175. This morning's 1177. And as long as we stay inside 1164, inside 1164 in the gold market, wants to put it up to this 1223. Silver is even strong, well, is stronger than gold, which is really pretty cool, because what the silver contract did is this. Silver, so silver's up 38 cents, SIK 5. What silver had done is this. Silver got into a price point yesterday of 1609, but when you look at the break of how silver went up versus how gold went up, what you have is this, is that silver absolutely broke its downtrend going all the way back to 1851, and with conviction. You get some follow-through out here today, and that's going to be, you know, if silver can close right where it is today, it'd be dynamite, because what you would have there, you have a good follow-through day. We'll see what happens tomorrow, but then we have a weekly setup. That weekly would be set up that you'd be also breaking the downtrend with conviction, and that's what you'll be looking for out here. If we go take a look at the TLT, basically blew away its swing point with volume. This little TLT, the 20-year plus, bottom line, let's see. So yesterday we came in with 13.9 million. Swing point out here had, is that 8 million? Yeah, we had 8 million. Your high is generated with 14 million. This is going to go back to the high. It's pretty amazing, but bottom line, that's where it's going. When you put it all together, so what you have is this. You put it all together, bottom line is that the market is saying that the rates are not going to go up, even though the Fed is saying that, okay, we took the patience out and we're prepared to go up. Bottom line, market's saying no. 10-year right now is yielding at 1.9%. And with our 1.9%, just to understand, and we're flattening out today, the rest of the world's not flattening out. The rest of the world, the rates are going even lower. You know, if you go to France, they're down 210 ticks. Germany's off another 100 tick. I mean, up. So up 210 ticks, up 100 ticks. United Kingdom's up 430. And as I'm saying, that the changes are up. What does that mean? That means that the rates continue to go even lower. Our phone number is 877-927-6648. Over in Asia last night, you had a market that was flattening out. We had the Nikkei down 0.4%. Hang Seng was up 1.4. You had Shanghai up 1%. In Europe right now this morning, what we have is that you get the FTSE flat. The DAX is down 0.4%. And what I expect you're going to get out here, we'll get a bit of volatility, but because of the way that the market moved yesterday, and what I expect you're going to see out here is that you're going to see this market flatten out, and the amount of energy that it took, you know, when you look at whether it's the SPY, whether it's the diamonds, whether it's the Qs, huge amount of energy yesterday. The SPY went from a 206.62 to 212. That is a monster move. And if you take a look at the future, just to see, I believe it was let's see, $40 move. Yeah, it's 40-point move. was a 40-point move. The Dow Industrials was almost from lows to highs. You're dealing with just about 360 points. So that's a big number. But what we will have, and this is what's really cool right here, because of option expiration, you're going to have some nice trades that are basically going to set up, that have set up because of the way that the market popped last night after the Fed announcement. Because what you had is this. You had many equities that have high volume lows, and in fact, we're going down yesterday with volume that made it all the way back to flat. That is a beautiful thing, folks, because what you have there is that they went into a swing point, have the high volume, flattened out, and I suspect you're going to see them come back into those lower levels pretty quickly. Something to keep your eye wrapped around is the XLE. The XLE, bottom line, it looks like it's setting up, and it might be setting up pretty good. It's not. I wouldn't bite on it yet, and the reason I wouldn't bite on it is because of ExxonMobil. There's a divergence between ExxonMobil and Chevron. Exxon and Chevron are the two largest weighting structures inside the XLE. The XLE basically looks pretty good, but when you look at Exxon versus Chevron, what happens is this, is that Exxon just doesn't have the juice. And it's like, okay, Exxon's going to try to test the bottom again. If you're looking at the XLE, what you'd love to see Exxon do out here is this. You want it to test the highs of the let's see, today's Thursday. You want it to test the highs of either Tuesday. It doesn't have to go back to Monday. It doesn't have to go back to the low. You want it to test that 84, 86, and right now you're at 86.07. That's where it's closed, but Exxon's going to open up down about $1. You want it to test that with lighter volume and reject it. It can even test the 84.18. If you get that, then you get action, because Chevron is set up right. CVX is a nice little setup. I suspect, that also is going to pull back this morning, but that's a sweet setup in comparison to XOM. So we'll see where that whole thing does shake out. Oil itself, what you have is this, CLK. And if you want to see, when you get these high volume lows, how they basically like to come right back, well, that's what we had out here yesterday. Yesterday, the oil contract went to 44.03. We closed at 46.85. But what that actually did, it went to a lower low with volume. And now we're testing that the next day. Most of the time, what happens is this. The test will normally come. Sometimes it comes this quick. Most of the time, it takes 2 or 3 days. But when you get a high volume low that is that whacked out, meaning it's that high, you come right back and test it. And that's what you want to see, bottom line. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Right now, the S&P futures are down 7. You get the NASDAQ futures off 4. Gold's up 11.60. Silver's up 36 cents. We're going to be right back.
As this one-of-a-kind winter comes to a close and spring approaches, it only seems fitting that now is the perfect time for a spring Tiger Dollar sale. For this week only, we're doubling the bonus that we give when you purchase any amount of Tiger Dollars. Normally, we offer a 10, 15, or 20% bonus when you purchase Tiger Dollars, but for this week only, we're doubling our special offers, and you can now get up to a 20, 30, or even up to a 40% bonus on your Tiger Dollar purchase. This is one of our best Tiger Dollar sales of the year and won't be around for long. Tiger Dollars can be used for any TFNN product or service and provide a great way to lock in added value on your subscriptions. Tiger Dollars never expire, so whether you're a current subscriber or plan on subscribing at one point in the future, take advantage of this spring Tiger Dollar sale this week only and get up to a 40% bonus on your Tiger Dollar purchase. This sale ends Sunday night, so don't miss out. All the details are on the front page of TFNN.com. Get your Tiger Dollars today and lock in your bonus before this sale passes you by.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And folks, as you're over to TFNN, you're going to see right in the front page, you have a few more days to take advantage of the Tiger Dollar spring sale. The way the Tiger Dollar works is that they're good on all product at TFNN, no expiration date, totally transferable. Most of the time we do a 10, 20, or 30% one. We're doing a 20, 30, or 40% one. And the way it works, you can buy $500 worth of Tiger Dollars, you get $600, which is a 20% bonus. If you want a 30% bonus, you buy $1,000, you get $1,300. And if you want a 40% bonus, you can buy $1,500. That's the most you can buy, and you get a $600 bonus, so you get $2,100. If you have any product at TFNN right now, you're looking for product in the future, a great way to take advantage of that. That is good till this Sunday night. That's how this is working. Now, let's go over and we take a look at the financials. It's gonna get interesting here, and it's almost like, man, how does the, banks themselves, folks. Okay, what ends up happening with banks? Banks want and need a larger spread, so they're looking for interest rates to go up. Bottom line is that the XLF hasn't been able to crack this high. And what we do have is this, is that it has to do with how we came down in December. And what's intriguing about this one is that, bottom line, the S&Ps come down, everything came down. The S&Ps got some juice in them yesterday. The NASDAQ did. Now, the XLF also did. but it couldn't get the price going. The XLF did 47 million shares, which is pretty decent, because we had come down with 51 and 58 million shares. You know, we'll see whether it can hold the price point. It closed at 24.70. We'll see if it can hold that 24.58. What you want to be lining up right now is this. You want to be lining up, will these ETF structures close over the swing points on the weekly basis? That's what you really want to see, how these are setting up. What I'd really love to see, which I think was going to be hard to do today, I'd really love to see that S&P hit the high basically right now. If it doesn't hit the high, if it goes sideways, then you're going to have a nice wild day out here tomorrow. That's the way this is kind of setting up today. What will be intriguing when this market opens to see, will the XAU, will the HUI get some follow-through? The equities themselves did well. It was the first time we had any sign of strength inside the gold stocks, the silver stocks. What we had, and on a continual basis, is they kept rejecting lows. Yesterday, you had the wide price spread, the accelerated volume, and I'd like to see that follow through this morning. You know, gold contracts up 13.20, and we'll see if, in fact, when the actual market opens. As the futures market is opened right now, bottom line is that we'll see whether there's any buyers inside the equity markets when this baby gets going. I expect that you are going to get some buy in there. Why? Because many of these equities are at lows, and let's see, dollar sign. And when you look at the aspect of how the XAU went higher, the XAU closed at 67.58. The way that is set up right now, that wants to go to $77. That'd be a nice setup, because what we've done, it tested everything at the December 16th lows, and you can't bust them down. Guess what? You're going to bust them up, and you know the way technically it's not set up yet to get up to the high of 83, but when you are in a large consolidation, which it looks like that's exactly what we have right now, that's a big number, because what does happen is this: when you're in a large consolidation, I wouldn't expect that we break that top of that consolidation the first time up. What I would expect is that you're coming up to it, and we'll be able to gauge. If you're coming up to it and you get some nice juice underneath it, meaning nice volume, and you're pushing into it, you back off. After you back off, you build a little more cause. Then what you have is that you have a shot to really hit some numbers coming into those higher swing points. What we are going to get, which is going to be pretty wild here, is that the correlation. Now, this is a fundamental correlation. The correlation in the mining business is that energy is a huge part of mining. The cost structure is wicked expensive, okay? The cost structure of getting this gold out of the ground is still like $11.50, $11.70. If, in fact, oil is staying lower and gold does get traction under it, meaning, you know, we're at $11.64, we got to get to about 11 GC. If you take a look at the continuous contract, I did this yesterday, but let me just look at this again. The continuous contract has to get inside that's pretty good. It's inside it right now. It's 1162. Inside 1162, and we're 1164. You stay inside 1162 in a continuous contract, we get action. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow down 73, Nasdaq's up 4, S&Ps are off 7.5. You got gold up 12, silver's up 39, and we'll see if we get some juice under these gold equities. There's nothing under them yet. They're basically trading sideways to slightly lower. Inside the Dow Industrials, what we have is this. You got American Express down 43, Caterpillar's off $1.11. You got Coke down 18, Oxy's down 123. What is putting juice inside the Dow and taking it out is this. Apple is the #1 leader out here. Apple goes in the Dow today. It's going to be trading in the Dow. That's up 61 cents. That's at 129.06. You got the Cisco #2. That's up 8 cents. Home Depot is up 29 cents. And Disney is up 13 cents. Taken away from it on the way down, we get Chevron as the leader on the way down. That's down $1.91. You get Caterpillar down $1.13. Goldman is off 171, and ExxonMobil is down 86. If we go take a look, let's go take a look at Chevron and Exxon, how they were trading, because we were just talking about those. So if we, CVX, we go to Chevron first. That's the leader on the way down. What we have out here is that CVX. Okay. So Chevron goes topside yesterday, has the juice behind the move. What you'd love to see is this. Okay, so Chevron, I'd love to see this baby test. The ultimate would be this. The ultimate would be a test of 101.84, and you're at 104. But we could take, I could take 103.27 too. 103.27 was the high of 2 days ago. You know, so we'll see whether it can get into that lower price point. Because if it does and rejects it, so here's the theory behind that, folks. If it gets into that lower level and rejects it, and it has lighter volume, so it rejected it with lighter volume, rejected it on price. Bottom line, that is in the probability is that you're going to go topside, and we're going to go to the top of the consolidation. If we look at ExxonMobil, Exxon's trading at 85.09. You're down 98 cents. We got up to a high yesterday of 86.37. The test on ExxonMobil would be 84.88, which is probably doable today. The ultimate, though, would be 84.18. If you get 84.18, down $1 from where we are right now, that would be a nice setup. Why? Because then you have a test of the high of the low. When you get a test of the high of the low, it's really sweet. Then what I would do with that, too, by the way, I would put that together with intraday, how the baby pulls back. So it's pretty cool what you can do when you come off lows and you're coming back and you're doing a test into those levels. We're going to take a look at the real estate market, the commercial real estate market. We look at the IYR. So the IYR, folks, bottom line, looks like it's not only off its high, but there we go. But we got some juice off that high on the way down. Now, yesterday, you had the volume come back. Let me just put this up on a daily. Okay, so the IYR has gone from a price point of 82 down to 76. You get a nice pushback yesterday. But what I expect you're going to see here is that this is going to get higher. You know, 81.27 would be the number as to looking at what can it do at 81.27. Because then what you have is this. This was pretty cool. You have a high volume swing low at 76.33. You're in a consolidation. Your proof would be, how do you come into this price point of February 2nd? February 2nd was the first downdraft off the high. And if you come into that with volume, guess what? That means it goes to the high. You come into that with lighter volume, that would mean that it's a failure, and you have your parameters set up. That's the real key. The parameters would be set up, and that would be a nice little setup. Some of the high volume stocks, well, here, let's go look at Apple. We have a couple tigers that want to look at Apple. Apple folks in the Dow Industrials out here today, they take Marvell out. And what you have with Apple is this. Now, Apple didn't get the juice yesterday, which is just a mind blower, actually. You know, Apple went from 126 to 129, but that's not a big number. Does Apple, if I was going to sell Apple, I'd let it get to your high volume swing. It's not the high. It's 130.87. I'd let it get up to that 130.87. Because the way Apple's set up right now, it looks to me like it wants to at least test the 118. The 118 is where that has a gap, and, you know, bottom line is that that little baby wants to get tested there on a shorter term basis. On a longer term basis, what you have is this. Apple has been going higher on a continual basis for quite some time with zero volume. So on a longer term basis, when this thing turns, it's going to be a disaster. I mean, a big disaster too, not a small disaster, because, you know, Apple took out its swing point of 106, which was on 2012, with light volume. We did, on a monthly basis, you did 1.3 billion versus 2.3. So you get $1 billion less on the way up. Bottom line is that, yeah, coming into the Dow, all the fund managers had to buy it and the funds had to buy it into the Dow. But guess what? That's done now. Bottom line, they set that up. Just because it's in the Dow today doesn't mean they have to buy it today. That was set up. It was announced, 3 weeks ago, I think. So that was set up coming into the Dow. The thing that's really wild, I want to see what that criteria is, that they've taken out Marvell, because the bottom line is that, and now what that sets up, when you look at the Dow Industrials anyway, what it does set up, I believe the only stock that is still in the Dow, which is the original, was GE. Some of the higher volume stocks out here trading right now goes like this. You get Apple's up 51 cents. You get Starbucks up $1.10. Starbucks is doing a 4-for-1 stock split, I believe, or 2-for-1 stock split. Guess must have some numbers. That's up $1.71. Visa is down 71. Visa did a 4-for-1 stock split on the way down. Oh, not the way down, but 4-for-1 stock split. The Adobe, ADBE, let's see what Adobe's doing. Adobe came out with numbers last night. Adobe is trading Adobe is trading down $1. I guess no, it was yesterday they come out. That went down with volume yesterday. So what you will see with Adobe's going to go after that swing low from yesterday, and the high volume swing low out here is 74.76. That little baby, you'll see something that's basically fast and furious. Those high volume swing lows that were out there from yesterday, they're going to go, I suspect, you're going to see them tested pretty quickly out here. And the kind of just like the oil market. The oil market in the dollar today, the oil market continues to want to go south. We're down 167 at 44.98. The dollar's doing a counter trend bounce. Well, here, let's go look at the dollar right now. DXM5. So the dollar index yesterday, this is so cool. Yesterday it got down to 94.76. We're trading 99 right now. We take a look at this on a 10-minute, and you get zero juice. So what you have is that the dollar's worn out right now, folks. That's what's going on. The euro is basically down 200, but as I had said the last few days, the dollar did a 1 to 2 ABC structure on the way up. You do anything over more than a 1 to 1.618 on the way up or the way down, that the probability is very high that's at the longer term change of trend in the marketplace. And it looks that when you really start putting this together, it basically spells out that, guess what? Naughty June, so the Fed meets in April, no meeting in May, then next meeting in June. It spells out that June is not, the rate's not going up. The way the dollar, I can't picture now when I'm really looking at it that the rates will even go up in the next 3 or 4 months. Why? Because the way that the dollar has made its run, it's made the full run. When you make a full run, and that run started in 2011, it's like, okay, so you can do something different for a year, year and a half. I know that sounds like a long time, and I remember the first time that when I was dealing with ABC structures, and I realized that, oh no, I can't believe that it's going to take this long for a trade to play out. Well, guess what? A year and a half goes a lot quicker than you think. So that's the way this thing is set up right now, and we'll see if, in fact, that's how it plays out. But the way that is in place right now, it's saying, guess what? If you're gonna go to Europe right now, now's the time to do it. If you have bills, your kids are going to Europe, you know what to do. Get over to Everbank and open a Euro account and do it right now. And if you're going to Europe, or you do have bills over there, that would be a beautiful trade because it's a delta neutral trade. What you would do is this. You're not speculating. You're saying, okay, I'm going to spend this much money. Guess what? Do it right now. And what would end up happening is that you have the euros, okay, so you'd spend that much money. There's only upside on that. The upside would be that the dollar is continuing to go lower, and that would be the upside of how that whole thing would shake out. What's going to be interesting here, let me pull this up for a second. I want to see how this is shaking out. Because these different currencies, Yeah, so the Canadian dollar right now is still at 127. Ooh, that's dangerous. Yeah, this is dangerous for the Canadian dollar, though. So, boy, these different currency correlations are going to be wild watching this thing shake out. Because the way the Canadian dollar is set up, man, the Canadian dollar can go to $1.50. That'd be insane. That would be that'd be a heavy number. Right now, we get the Dow down 94, Nasdaq's off 25, S&Ps are down 10. Let's see what the futures are doing here, man. They're putting a little juice into this downtown. This is gonna set up so cool for. Yeah, they just took this thing downtown. ESM 5. So let's see. Intraday, what this future just did. They're pressing it. You know, let's see. They got into the top of the bar on the way down. Man, the volatility, I guess, is going to be here. So we're at 2082, 2073's game now. 2073's game. Oh, man, you're going to love this market. Unbelievable. Inside the Dow Industrials, let's see what's moving inside this Dow. So the Dow, Caterpillar, Chevron, ExxonMobil, and Goldman Sachs. Man, some of these large stocks, man, they're having some big swings, huge swings. And someone is unloading on this S&P. There's no two ways about that. What you want to be looking for is where were the high-volume stocks yesterday? That's what you want to be looking for, because these babies are going to get tested, and the way this market is trading out right now, they want to get tested sooner rather than later. That's the way this is set up. If we go over to Goldman Sachs, we take a look at Goldman, what you're going to see, let's pull Goldman up. So Goldman Sachs out here, she's coming right back into the consolidation. See, these financials are having a tough time. The December downdraft for the financials have set up a really tough time for that to get over it. And each one of them are basically doing the exact same thing. And that's another indication that these rates are going to stay low. That's what's shaking out here. You get the bonds, the 10 years up 2 ticks, the 30 is up 18 ticks, King dollar's up 500, gold is up $13. You get silver up 370. The XAU, the HUI, they're basically down slightly. You get the XAU right now down $1. You get light volume inside of that. We get the HUI. HUI is off 164. Not a big deal. Big Blue. So Big Blue yesterday, I got a little juice underneath it. Big Blue right now is trading out at 159.89. And you know, it's a trip, I'm telling you. Man, Dave White, he was doing a great workshop last night. But when we were doing the program on Friday, so last Friday, where it was Big Blue was like 155 or something. He was saying to me, he says, man, he says, you know, that Big Blue, he says, they love nailing 158 on option expiration. It's a trip how that, and what the 158 probably was the max pain, folks. But the bottom line is that more than likely that's exactly where Big Blue is going to be coming into tomorrow. That's the way it looks like it's setting up right now. The oil market is still teetering at its bottom, and we'll see how it's going to handle this 45 price point. What we do have out here is that the oil market yesterday. You got the expansion off the low yesterday, and then what you have this morning is that you're right back down into that low. This is Tom O'Brien. This is TFNN. Don't forget about the Tiger Dollar sale, folks. If you have any product at TFNN right now, you're looking for any product, you get 4 days. Yeah, 4 days to take advantage of it. Dow Industrials are down 100. Nasdaq is down 1. S&Ps are up 10.5. Gold's up 13. Silver's up 37 cents. We're going to be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. So you got the Dow down 87, NASDAQ is flat, S&Ps are down 8, and let's go take a look at those S&Ps for a second. So let's see, where is she? Bring this one up. It looks to me this market wants to flatten out. ESM 5. So you take a look at these S&Ps. We got down to 2081. You're at 83 right now. So, no, you actually, the way this is set up, this is not down on the downside yet. So what you have is this: that your first little sell here, they pushed it down to 83. You had some juice behind the move. They got it down to 81. There was no juice behind the move. They want to try to pop it into this 84 area, but they're going to need some juice. It doesn't look like they're going to have it. It looks like this will do one more leg, which it's going to be wild to watch this set up, because that would set up that you can see it's in no man's land right now. What no man's land is this, folks. Your expansion yesterday at the 2 o'clock mark went to 82. Well, we're at 84 right now. We pierced 81. The 82 number is the number, the real key. That's the number. That's where the battle line is going to be set up here today. You break the 82, and that puts game into the 70 area. So this is going to be wild watching this whole thing shake out. Gold's still staying up there. The equities basically haven't done anything. Silver's staying up there. Bonds are on the move again. Bonds are basically, you get the 10-year up 3 ticks, the 30-year up 19 ticks. Bonds are saying they want higher price. We put that TLT up there quickly for you. What you have inside the TLT, right now your TLT's running sideways. This is Tom O'Brien. This is TFNN. You stay right there. We have the news coming up for you, folks. And our man, Mr. Basil Chapman, going to be out there growling and prowling with you. Larry has a special guest today. He has Arch Crawford coming on. Be right back, folks.